Well, good morning, Director.
Good morning, Mr. Chairman.
I see we're pulling up various members. I know Treasurer Myers on, and Auditor Racinas, Superintendent Balo, and there is the good Secretary of State. So I see it as 8 o'clock. Madam Director, if you're ready, I believe we do have a quorum for the record, and you may proceed.
Thank you, Mr. Chairman. I would recommend that the board first convene as the State Loan and Investment Board. And on the agenda for the State Loan and Investment Board, the first item is A, which are approval of meeting minutes. We have meeting minutes from the November 5th, 2020 State Loan and Investment Board meeting, and we have minutes from the December 3rd, 2020 State Loan and Investment Board meeting. And Mr. Chairman, I would leave it to your discretion to decide to approve them individually or collectively.
Thank you, Madam Director. Members of the board, I would accept any motion, either individually or jointly, to approve these minutes. I'm assuming you've all had a chance to look through them. If there are any changes, you would bring those to our attention right now. Madam Superintendent.
Mr. Chairman, I would move to approve the minutes of November 25th, 2020 State Loan and Investment Board, as well as the minutes of the December 3rd, 2020 State Loan and Investment Board meeting.
So the superintendent has made the motion. It's been seconded by Secretary Buchanan. Is there any discussion? Hearing none, all in favor signify by the thumbs up or an aye. I get a thumbs up from the secretary, the superintendent, and the auditor. Treasurer Myers' screen is blank. That motion will carry, so we can proceed.
Mr. Chairman, the next item on the agenda are reports. We've provided the board with the usual reports behind tab B. We have nothing to add at this point, but should there be any questions, we would stand for them at this time.
Are there any questions from members of the board on the reports? Any questions? Hearing none, thank you, Madam Director, for the reports. They're helpful, and we can move on to the next item.
Mr. Chairman, we have provided the materials for this meeting in advance and have briefed each of you individually prior to the meeting. At this time, I'm prepared to propose a consent list if the board would so desire.
Would appreciate that.
Okay, Mr. Chairman, the proposed consent list is E1, F1, G1, J1, and J2.
Members of the board, I think you've heard the proposed consent list. E1, F1, G1, J1, and 2. If you support that motion, I would appreciate a motion. I see the treasurer has made that motion. It's been seconded by the secretary. Is there any discussion? Hearing none. All in favor of the consent list of E1, F1, G1, J1, and 2, signify with a thumbs up or an aye. I have thumbs up all across the board. Every member says yes, so that consent list passes. I would now entertain a motion to adopt the director's recommendations on the consent list.
So moved, Mr. Chairman.
Motion's been made by the superintendent. It's been seconded by the treasurer. Any discussion? Hearing none. All in favor signify with a thumbs up or an aye. I have thumbs up from the secretary, the auditor, the superintendent. Mr. Treasurer has his thumb up as well. We can move on. That motion carries. Thank you.
Thank you, Mr. Chairman. The next item on the agenda is C1 under policy matters. It's to consider authorizing the Office of State Lands and Investments to proceed with the regular rulemaking process to amend Chapter 37, Student Dormitory Capital Construction Loan Program, State Loan and Investment Board Rules and Regulations. The Student Dormitory Capital Construction Loan Program was enacted during the 2018 budget session of the Wyoming Legislature. The act created Wyoming Statute 21-18-319, which provided administration and rulemaking authority for the program to the State Loan and Investment Board. The legislation provides authority for the board to issue loans from the Permanent Mineral Trust Fund to eligible community college districts for infrastructure projects directly associated with the development and construction of student dormitories. Chapter 37 of the Slib's rules and regs, we've identified some areas which require some amendment to reflect actual practices that the board is abiding by today, as well as to amend language to change, to amend language due to a change in process that's no longer has all loan funds deposited into a demand deposit account upon the loan being closed, to remove certain language and reflect options for refinancing a loan if the loan is in default or if there's a potential for the loan to go into default. There's also some additional non-substantive typographical corrections that we are suggesting throughout the chapter. So it is the director's recommendation that the board authorize the Office of State Lands and Investments to begin the regular rulemaking process to amend Chapter 37 of the Student Dormitory Capital Construction Loan Rules, and we would stand for questions.
Thank you, Madam Director. For the members of the board, are there questions of the director or staff on these proposed rules? Hearing none, I would entertain a motion.
Mr. Chairman,
The Madam Auditor, and then I see the Superintendent.
I would move that the board authorize the Office of State Lands and Investments to begin the regular rulemaking process to amend Chapter 37 Student Dormitory Capital Construction Loan Rules as discussed by the director.
Thank you. It's been seconded by the Superintendent. Is there any discussion? Any discussion? Hearing none. All in favor signify with a thumbs up or an aye. I have thumbs up from the auditor, the secretary, the treasurer, and the superintendent. That motion carries, Madam Director.
Thank you, Mr. Chairman. The next item on the agenda is D, State Investment Matters. I would yield to the Treasurer's Office to provide any information concerning D1 and D2.
Thank you, Madam Director. Mr. Treasurer.
Thank you, Mr. Chairman. We have some informational only matters today. The first one is a report from our consultant, RVK. I believe Josh should be available to go over the fiscal year 2021 report for the current quarter.
Josh, are you on?
I am here. Thank you, Mr. Chairman, Mr. Treasurer, members of the board. Great to see you again this morning. I believe Lisa is going to help me out with the slides here. So Lisa, if we want to turn to page 2 to start, right here, just a kind of a quick recap of capital market returns. And you can see on the left-hand side of this page, we're just showing you calendar year performance for the past 10 years and simply ranking them each year from best to worst, top to bottom. And you can see on the far right-hand side of that, where it says calendar year to date as of 12/20, that's the 2020 return. And although, as you are well aware, it was a wildly volatile year in 2020, in sum total, it actually ended quite well. And as we know, it's primarily been driven markets in the past year by two primary forces, the pandemic and then the second being the policy response to that in terms of monetary response and fiscal policy response. On focusing just on those two areas, on the pandemic front, in the fourth quarter, we got pretty good news on the vaccine front. and you're starting to see that roll out. So markets definitely rebounded and accelerated their rebound on that news in the fourth quarter. And on the policy front, we got another $900 billion in fiscal policy. The Fed has, on the monetary side, indicated a willingness to keep rates where they're at for as long as they need to. And there's almost certainly more fiscal policy to come, just not quite certain what the shape and size of that is at this point. So you can see last year, what did the best? Equities, and especially US equities. The two top boxes there, small cap and large cap US. Small cap really accelerated in the fourth quarter and actually passed the S&P 500 for the year. What you don't see on this page is within equities, there was for the year, a pretty big outperformance from growth, although that did also shift towards the end of the year where we started to see more of the value sector start to outperform. Non-US equities right behind that at about an 11% return. And bonds, the 7.5% return that you see there for the aggregate bond index was a very high return for an index that has a very low yield. So that's a function of what was happening with the decline in interest rates. And you look at 2019 and 2020 together, and there's a lot that's actually similar between the past two full calendar years. And it's really kind of the same winners at the top, US equities in particular, followed by non-US equities, but generally equities have done the best. And really outsized returns for bonds relative to some really low starting yields, 8.7 last year, 7.5% this year. And unfortunately, it's great from a return standpoint, but it leaves us in a really kind of tricky spot where we look out now where prices are, and we do our forward-looking capital market assumption work, and we see how low yields are in bonds. And there's a saying that yield is destiny in bonds. So those low starting yields sort of make it our destiny to have low returns from bonds. And it's becoming, as you get close to zero, to get these kinds of returns again from safe bonds, you really need rates to go negative. And that's probably not the most likely outcome in the US. I don't think we can rule that out as a possibility. But it's really sort of starting to become a very unattractive risk-reward profile for safe bonds in particular. And that's tricky from a portfolio construction standpoint, because then what do you do for safety, especially in an environment where equities are also relatively expensive. So it's going to really challenge us as we look at asset allocation this year. We're planning to start that process with a meeting coming up with the IFC here in the next couple of months, and we'll be reporting out of that to you all immediately after that. So I would expect that we'll be really trying to ask ourselves the question, how can we find sort of alternative sources of sustainable, high quality income and a total portfolio that generates a return high enough to support the intergenerational equity long-term goals of the permanent funds. And it's going to be somewhat challenging to do that. We may have to look at some new types of investments to add to the mix. So that's just a real quick sort of market overview. I know Patrick's going to also be on the agenda here in a minute to provide his perspective. But before I go into performance, why don't I take a quick pause there and see if there's any questions so far from the board.
Josh, I'll ask, are there any questions for Josh?
Yeah, Josh, I haven't given you, I guess, any forewarning on this, but looking at the standard deviation and where we're at now, that I think that we're somewhere in our investment policy statement of being somewhere around 10 to and a half or to 11 at the highest and you look at the standard deviations there, it seems like the risk is going up, and I'm just wondering that and trying to get out of bonds. From my perspective, the flexibility that we need, it really goes to a reference portfolio. And could you briefly just say something about the standard deviation and what's occurred there, and the flexibility in a reference portfolio versus a 70-30 legislative designation?
Yeah, thanks, Mr. Chairman, Treasurer Meyer. Just real quick, the treasurer is referring to this column that says standard deviation, and that's a statistical measure that measures the volatility of each of these asset classes. And that's a this particular version of standard deviation is a backwards looking historical view of what it's been from 2006 to 2020. So that's just measuring the historical volatility of the returns. How widely have they differed from one year to the next? And not surprisingly, stocks are relatively high, especially small cap equities being much more volatile. Your lowest volatility is cash, not surprisingly, and then relatively safe as well at 3.2 is aggregate bonds. That's investment grade US fixed income. And it's really sort of the balancing of these asset classes in a portfolio context that allows you to generate a better return per unit of risk profile than you would likely get from just picking one of these asset classes and only investing there. So the challenge that I'm speaking to is, we've had a pretty good return per unit of risk ratio for bonds. Look at the ag; it's been 4.5% returns over the last 14 years here, with only 3.2% vol and a Sharp, which is in simplistic terms the sort of ratio of those two. And above one is fantastic. It's going to be really hard to do that going forward. Treasurer, if I can wait on the reference portfolio, I've actually got some slides later in the presentation that I think will help speak to that.
Yeah, fine. Thank you, Mr. Chairman.
Josh, and not to go down a rabbit trail too far, but I'm understanding there is some discussion about changing sort of essentially the spending policy, more or less. And I guess what you're pointing out here is really, for me, a concern with going to a 5-year average as opposed to waiting something for more recent returns. And the reason I say that, if you're looking at a 5-year average, normally that smooths things. But if you are looking at a down market, it does really require you to spend. If you set that as a policy directive, you actually do end up overspending in a down market. Have you had conversations about that? And is there something this board can do to be helpful with cap finance in basically trying to find the right mix there for a formula for spending policy?
Mr. Chairman, yes, there have been a number of conversations around this topic with the IFC, with the Treasurer's Office, and there's also with CapFin, and there's been quite a bit of research we've shared on this topic. And first thing I would suggest is some separation of concepts here. So spending policy in the items that you're referring to in terms of the percentage that's spent and the sort of calculation of what the spending policy amount is that's what we're dealing with. Is it 5%? Is it 4%? Is it 5.5%? And is it a 5-year average market value, or is it a 3-year average market value? On that front, I think you raised some good points, and generally with, as you can tell from my comments, we expect lower returns going forward. And so if you have to earn your spending amount plus inflation to meet the long-term objective, that suggests that a lower spending amount is probably more sustainable than a higher spending amount. And we can run analysis on kind of the difference between 5-year trailing and 3-year trailing. There's pros and cons. The 3-year trailing, to your point, is going to more quickly recognize declines in portfolio value in a down market so that you don't continue to spend. But a 5-year does provide a little bit more stability as well. A more primary issue from my perspective, though, is not how the spending policy amount is calculated, but how the spending is funded. And currently, it's for the PMTF and the Common School Permanent Land Fund. Most of the permanent funds, it's defined in various parts of the state constitution and even in the state's act of admission as income, that only income can be distributed and that all income will be distributed. And that's the issue that becomes problematic and sort of creates distortions in how the portfolio is managed. If you can only spend income in common, you'll see this in the returns, for example. You'll see for last year, Common School Permanent Land Fund returns are lower than PMTF. And that's because it's an income-focused permanent fund. It's been geared more towards income-producing assets. And when you do that, you tend to also accept, force yourself into lower long-term returns. And so the Treasurer's Office, I know, has done some research on this issue, looking at what other states have done to amend their Enabling Act, or because this is fairly common language, it's from the 1800s. And it's really sort of a 19th century view of how finance works. It doesn't really work in a modern portfolio setting as well. But there are some good examples of where other states have actually gone to the US Congress to amend their Enabling Act or Act of Admission, and then made simultaneous adjustments to their constitutional provisions to allow for basically removing that sort of really prescriptive definition of income is how you fund the spending policy amount. So I'm sorry, Mr. Chairman, really long-winded response, but this is an issue we have been spending a lot of time on, and I'd be happy to answer more questions now, and would also welcome any opportunity to speak with Slib members beyond this meeting on that topic.
Thank you, Josh. And I know this is an issue near and dear to the Treasurer's heart, as it was to mine when we were there, and I really commend both the Treasurer and his staff for continuing this. Personally, and Mr. Treasurer, I don't know if this makes sense to you, but when we have our board working session, I would love to spend a little bit of time on this concept. I realize a lot of it is in the legislator's purview as far as defining things, but I think for management of the portfolio and our ability to be helpful, it's also important we understand what the consequences could be.
Yes, sir. Certainly, Mr. Chairman, it is definitely our intent to make sure that we go to the legislature with a unified and educated voice. And we have been working on this for a couple of years very intensely. It was the topic of our last Treasurers Conference, and we haven't stopped past then. We've been trying to develop, in conjunction with a subcommittee of CapFin, some perspective language and some different alternatives that we can use, both in the statutory areas, in the constitutional area, and other areas of return producing constraints that we, along with RBK, have identified. to try to modernize and develop best practices in our investment strategies.
Thanks, thanks, Josh, for the side trip. I didn't mean to get too much into that, but obviously a lot to talk about. Please proceed.
Thank you, Mr. Chairman. Lisa, if we can go to page 3, just a quick snapshot of the asset values at the end of December. Again, the color coding here is green shaded funds are the permanent funds that fall under the investment policy category of long-term total return. So permanent mineral trust fund is the largest of those. The blue shaded pieces of the pie are the income-focused permanent funds that I referenced, Common School being the largest of those. And then the rest is made up by the various reserve funds, starting with the Workers' Compensation Fund in yellow, Pool A, LISRA, and the state agency pool. Advance one page, Lisa. So here at the top level is the performance of the total fund. And I would remind the board that the total fund is really just a roll-up of all of those funds I just mentioned. And there is no real policy for the total fund, but this is where we measure total fund performance against a total fund benchmark. And the benchmark is also a roll-up of all of the benchmarks of those funds. So this is a quick way for you to get some insight into whether or not you're seeing performance net of fees that's above benchmarks or below benchmarks. And as you can see, over any longer time frame, you're either right at or a little bit above. We do have a little bit of trailing performance here, mostly in the most recent quarter. As you look at the fourth quarter, where we saw this rapid acceleration of risk assets in particular, you did have some pockets of the portfolio that were perhaps where you've got managers that are a little bit more conservatively positioned and perhaps didn't capture the full upside of that. You see that in small cap, for example, which is actually the best returning asset class for, these are the fiscal year to date returns versus benchmark by asset class on the second bottom half of this page. Your best performing asset class at 33%, which is fantastic, obviously, but a benchmark that was up almost 38%. You see a similar dynamic perhaps with long duration bonds. Your manager here, now MetLife, formerly Logan Circle, underperformed a little bit there. Your long credit manager there. Nothing that we see in the near-term performance from a manager perspective that we would note as sort of unusual or concerning in any way. And as you can see, fiscal year to date, that puts you right at 7.4, which is about 20 basis points behind, and pretty much dead even on a full 2020 calendar year basis, right under 7%. And Lisa, if we can go to the next page.
Josh, just one point on that. You know, one of the big troubles with comparison of Wyoming to other funds is the objectives are slightly different. I think New Zealand Super, for example, has no, it doesn't have to generate any income because it's not going to start paying pension till the year 2025, if memory serves correctly. So when you look at that and the risk that they can take and the timeline that they have versus what Wyoming's obligation to produce income for the state to live on, is there a way as you break these down? I know I'm just talking about this, I'm comparing sovereign wealth funds, but I also in this, that we can compare like to like, so we aren't comparing horses to camels or you know, that kind of thing?
Yeah, thanks, Mr. Chairman. Good question. Here, I would say where we're measuring performance against market benchmarks, this is a reasonably like-to-like comparison. And over most periods, you've done relatively well here. You're absolutely correct that it's problematic to try to compare your funds to other endowments and foundations and even other state permanent funds where they don't have the same restrictions as you. So that gets really hard to do. But we do once a year provide at least as best as we can a more focused peer comparison against other states. And even in that, we can't just look at the returns. We've got to look at what the restrictions are in each state, how the asset allocations are different, as well as looking at things like risk-adjusted return. And we actually have a few new slides that I'm going to get to in a minute here that actually look at Wyoming's returns on a risk-adjusted basis relative to global markets. And you'll see when we do look at that, Wyoming actually has a really good history of providing a good level of return for the level of risk that's been taken. Okay. So as we look at the individual funds here, and again, the color coding carries through. So the green shading here represents the long-term total return focused permanent fund, starting with permanent minimum trust. As on a fiscal year to date basis, really doing quite well at 11.1%, right in line with its benchmark. The 70-30 here is a reference benchmark that is made up of 70% global stocks and 30% US bonds. It's not here to provide a comparison of your performance so much as it's here just to provide a market-based reference. It's an unfair benchmark to the governor's point in that you've only recently been able to invest up to 70% in equities by state statute. And so it's actually unrealistic to assume that you would have been at the maximum all the time. You actually own a much more diversified portfolio. But this is something the IFC has asked for us to include in our reports for their reference purposes. And I think it does perhaps serve a little bit of a purpose just in terms of looking at what potential opportunity costs may have been, had you been able to invest, had your active admission, constitution, and statutory restrictions allowed you to invest in this sort of more traditional endowment 70-30 type of way. You can see over the longer term periods, what the potential opportunity cost of that has been. And I've got a few more charts where that 70-30 is going to come into play, and that will help me get back around to the treasurer's question about a reference portfolio and what that means. I also noted that in blue here, common school, we had lower returns last year because of the lower just traditional public equity exposure, the more focus on income here, and positioning more towards income oriented asset classes, right in line with its benchmark, actually a little bit better. And for the full calendar year, actually did quite well here relative to the benchmark. Workers' comp, I mentioned the long credit manager underperformed a bit here in the most recent quarter. So you're seeing that is a little bit of near-term underperformance, but actually did extremely well over the full year. And this was actually your best performing fund last year at 12.1%. And the big driver of that was the liability hedging fixed income. So it's a longer duration bond portfolio. So it's benefited the most from the decline in interest rates that we've seen. And Lisa, let's go forward one more page here. I'll just wrap it up with LISRA here. And LISRA, we've got a total fund line, and then directly below that, the three subcomponents: the long-term reserve, intermediate term reserve, the short-term reserve. The short-term reserve is all low duration, high quality bonds. Intermediate term reserve is all high quality intermediate term bonds. And each of those is roughly a third of the LISRA assets. And then the last third is the long-term reserve, which is more of the long-term growth assets. When you put all of it together, LISRA does have about 20 to 25% in equities, with about 2/3 in high quality bonds, and the balance in some of the diversifying alternatives. And then lastly, Pool A, 6.9 fiscal year, and for the full calendar year, 8.1, and very nice outperformance there. And state agency pool, which is mostly the ladder bond portfolio, not surprising, the lowest returns last year, only 20 basis points fiscal year to date. That just gives you a sense for when you're just looking at that high quality short-term part of the bond market, or any high quality part of the bond market, you know, these are the kind of returns that we should get used to for those types of assets. So I mentioned a few new pages I wanted to jump to. Lisa, if we can go to page 7. And this is something that's been added to the report at the request of the IFC, and also in coordination with the treasurer, to just, and it's really more of a perspective piece. And so here we're measuring standard deviation over rolling 3-year time periods. So the chart reads from left to right. Each point on the chart is what the value was for the past 3 years at that point. And the reference, the treasurer mentioned a reference portfolio, and the reference portfolio that we're using here is that 70-30. So 70% global equities, 30% bonds. And standard deviation, again, remember that's the riskiness or the volatility of the returns. And this just gives you a sense for each of the funds how the risk has compared to 70-30. And not surprising, your permanent funds are the highest of the Wyoming funds. And then as you get down here towards the bottom, you see some of the reserve funds. And it's probably easier to read this data on the next page, page 8, which is the same data, but it's just portraying the standard deviation of each of your funds as a percentage of 70-30. So if it was at 100%, that would mean you had the same risk as 70-30. And you can see down here, this, suggests that your permanent funds have kind of been in this 60% range, increased a little bit lately as the equity exposure has been going up. And the reason that we're presenting this is there's been quite a bit of discussion at the IFC and CapFin level of the statutory restriction that you have in policy that limits you to 70% in equities. And the way that that's been interpreted has been that equity is anything that's not bonds. And so whether it's stocks, real estate, preferred stocks, hedge funds, those are all considered equity because they are not bonds. And if you look at the universe of other state permanent funds, some of the leading funds they don't necessarily have 70% in stocks, but they often have 80% or so in the combination of stocks, real estate, private equity, hedge funds, other alternatives. So that 70% cap that's in your statute is another limitation on returns. And what we see with especially some of the leading global sovereign wealth funds is the way that they define risk is not as a strict sort of percentage on types of assets, but it's often more akin to something like this reference portfolio where their statutes may read or whatever document is out there that defines the risk policy, it will often reference a reference portfolio and have language along the lines of, rather than saying up to 70% in equities, it might be risk that's no greater than a portfolio that is invested 70% in equities. So that's just again some of the things that we've been discussing with the IFC, and they've asked for this data to be included in the report. So I wanted to walk you through that. I see
Josh, I have a question from Superintendent Balo.
Thank you, Mr. Chairman. Josh, it's good to see you. It'll be good to see you in real life soon. Just a question, will the IFC be coming to us with a policy recommendation on this equities cap?
Mr. Chairman, Superintendent Balo, I defer to the treasurer on exactly where this is, but he has shared some language with the IFC and asked for their feedback. And Treasurer, did you have anything that you wanted to add to the superintendent's question?
Yeah, we're going to have a discussion with the IFC next week. This week, we wanted to do it this week, but the Zoom calendar was just pretty much full. The process that we have to enter into is first have a statutory change, because in the Constitution, it says that the legislature shall, determine the amount of equity that the state can enter into. So the statute says right now, and this was a change that Governor Gordon got when I was still in the Senate, and helped him with that it was 55 and it's moved to 70% equity. And so what we want to try to do is say that it would be a reference portfolio that the IFC would recommend, the same process that we have, that the treasurer would recommend to the IFC, and the IFC would advise, and then the Slib board would approve. And so we're still looking at the directives and how much flexibility that the IFC would have. So it kind of ranges from a reference portfolio that's 70-30, defines it in statute, or allowing the IFC and the expertise that those members have, essentially in conjunction with the treasurer, advising the Slib board to approve or disapprove. The benefit of the latter is being able to have the flexibility to, develop different investment strategies without having to change the statute, but still have the Slib approval and still have essentially the IFC essentially controlling the range of risk that's appropriate. And we still have a couple of places. That 70-30 is just for the permanent funds. Necessarily, there isn't any statutory control or guidance. I'm not sure whether there should be on all the other funds, the other 8 to 9 funds that we have in addition to the 2 permanent funds. So that's kind of the discussion that we're going to have next week with the IFC, and we've been having those discussions with Cap Fin for some time here. So hopefully we'll come up with a consensus that between the IFC members that we can present the Cap Fin, that they'll present to the legislature, and then we'll go through the whole process with the Slib and the IFC, so you have a full understanding of what the discussion is and why their recommendations are what they are or will be.
Thank you, Mr. Treasurer and Superintendent. I just add to that. The legislature is in this enviable position of saying we want the treasurer to make as much money as he possibly can, and if he's not making enough, we're going to get after him. And then if you run the risk, raise the risk, and you get on the wrong side of that, then they'll hang the treasurer because he took too much risk. So the legislature needs to be part of that discussion, which is so important, about what is the appetite we have for risk. And so I really commend the treasurer for his work. And I want to make sure that the legislature understands they have a responsibility in this as well.
And well put, Mr. Chairman. I guess I'd say that the treasurer is always standing on the gallows or has a handkerchief on in front of the firing squad.
Thank you.
A very enviable position. I'm sure everybody would love to jump in on that one.
Thank you, Mr. Treasurer. Josh, anything more?
Thank you, Mr. Chairman. One last page, I promise. Lisa, if we can go to the next page. And this is to follow up on what I noted earlier about risk-adjusted returns. So this is the rolling 3-year Sharpe ratios. And the Sharpe ratio is, again, a measure of how much return did you get relative to the risk that you took, or how efficient were you with the risk that you took. And a higher Sharpe ratio is obviously better than a lower Sharpe ratio. And here we show you, again, the deep purple line is the 70-30 portfolio. We show you in here we've simplified the chart to just focus in on the 2 largest permanent funds. And, every 3-year period is different, but the one thing that is really nice to see here is pretty consistently and much more often than not, your Sharpe ratio has been higher and sometimes substantially higher than this 70-30 reference portfolio. So, Mr. Chairman, members of the board, that concludes what I had for you today. Thank you for the little bit of extra time to go into a couple of those things. I'd be happy to answer any other questions that you have.
Thanks, Josh, and for you and the treasurer, again, really, and for the treasurer's staff, I see Patrick on and Lisa, really excellent work. This is the largest part, I would suspect, of the returns to the state, so I think it's appropriate this board takes time to look at it. So, thank you. Any questions for Josh? Hearing none, thank you very much, Josh. Mr. Treasurer.
Yeah, Mr. Chairman, we've got a couple other D2 matters. One is Patrick's report on performance, but there's another one that is just kind of that I see here that popped up. Is just kind of an informational piece there that on Clifton Larson Allen CLA. I'd like to do the CLA one. It shouldn't take too much time. This is just informational that there's a contract with CLA and that they're going to begin their assessment, and the report will be provided to the board in advance of the meeting. I can tell you that I think they're about on their last draft of that, and we should have their final report that should be available for the next meeting. And with that, Mr. Chairman, if there's any questions on that, I'd answer them. If not, we'll turn it over to Patrick for his report.
Any questions for the treasurer? Hearing none, Mr. Treasurer, I just would commend you for continuing the work of dragging. This has been a very engaged board over the last decade, and you are taking it to new heights. And so for the secretary and superintendent who've been along for longer, part of this, just the difference between 2012 when I came on as treasurer and what you're doing now, just thank you very much for, I think we're right at about 19, maybe 50 at this point, and we've got to get to 2000. So you have moved us from 1930 to 1950, and you're moving us faster. So thank you.
And I think that the whole process, when we get through some of the things that Josh was talking about and the things that are going to be in the CLA report, I think it'll probably take us, another 2 years or so on accounting, and who knows how long on the other things. It'll probably be a 3 or 4 year process. So, but it's frustrating to come from a world of business and go to a world of government and the implementation time. But it's rewarding in the long run, Mr. Chairman.
Thanks. Mr. Fleming.
Good morning, Mr. Chairman, members of the board. My name is Patrick Fleming. I'm the CIO for the Treasurer's Office. And my part of the presentation is just to update you on our quarterly performance and also just the investment outlook and the things that we are focusing on. And I think this is a good segue into some of the things that we're talking about because as you all know, we focus on the asset allocation that is promulgated by the board, and we try to produce alpha on that. But I think both the treasurer and the governor pointed out that it's wonderful, to focus and see on where these historical returns are. But with our number one focus of being the highest risk-adjusted return, since kind of that's part of my job is just to make sure that all of you are aware of the risks by taking on additional risk and where we are in the investment cycle. So with that, I'd just like to go through a couple different slides, just talk to you about what we've been looking at as far as valuation and presentation. I think we'll have some good news and bad news. I think I'll just really start off on the bad news first, which is stocks continue to be very expensive. And whether you look at this from the aggregate level, because people talk about the FANG stocks really driving this thing, the Facebook, Apple, Amazon, Microsoft, Google, but also just the median stock. Well, where are we on the median stock profile? And they're very expensive as well. If you look at some of the variations or the values on the bottom, which would highlight the stocks are not as expensive, those are in relationship to bonds. And so really what you're saying here is that bonds could be, which I would argue probably are even more expensive than stocks. And that's why the stocks look cheap to a very expensive bond. But the typical kind of areas or valuation metric that you would look at, which would be, your PEs and your EV/EBITDA, all those type of things are still in the 99th to 100 percentile. So very expensive on that front. Some of the things that we're looking at is saying, well, if it's very expensive, should we lighten up? And as you know, over the years, I've been commenting on things that are very expensive, and they just continue to get more expensive, so that it's very difficult to time it. And that's not, we know from a risk-adjusted return, timing is one of the worst risk-adjusted principles. So that's not what we do. But what we do say is, okay, where can we be cautious? What can we do? And try to move different assets into different managers that do better. And I'd argue that we're entering one of these times to be even more cautious than we've been, just because of some of these metrics that we look at. Just examples, Goldman's risk appetite. We're seeing a lot of froth in the market, and as you know, you've been reading headlines of what's happening. But when this market gets up to these type of valuations, you typically see some type of correction in the market, and that's really something that we're focusing on. But again, if you look at these numbers on the right-hand side, upper right, over a one-year period at these valuations, you typically see an 8 or 10% drawdown. But if you look at the numbers on the left, there's no timing. They don't ring the bell in the morning and say, hey, we're going to correct 10%. So that's the difficult part of it. But just highlighting as we walk through this process of looking at being able to be more nimble and invest in riskier assets or change the way that we look at risk. We also, I just want to caution on understanding where we are in the investment cycle. So where are we right now? We've basically rallied up 75% off the lows. That's a significant move, and as you can see, many of these metrics just show that we're very overbought. The froth that I was alluding to before in the market, here, especially in certain tech companies over the last year, as Josh has mentioned, the small caps have rallied up significantly, but valuation and where this value is coming from is questionable. This chart, I think, is extremely important in understanding, and I'm going to show why that this isn't so important from one of our underperforming managers and what's happened. But if you see this red line, the top 5 most shorted stocks since October 30th is up over 100%. So basically what's happening is these companies that are very questionable at best have rallied dramatically. And so that's where you're seeing the GameStops and all of the different companies that have extremely high debt that have done extremely well. And so that's not normal. And this is not normal, but these are the things that typically happen in the later stage of a bull market. And so these are the things that we're focusing on. Put call ratios, the amount of calls that have been bought by very small investors are off the charts. And you can see on the left-hand side at 34, it's the lowest put call ratio that we've had since 99. So these are just things that make us nervous when things like this happen. When I took this chart, I just thought it was funny because when I did this, I just had to throw in this penny stock. There were 6 stocks. This was noon when I did this chart, but there were 6 penny stocks at that day that had over a 10,000% return on that day. So we talked about the bonds. So wonderful. You say, okay, well, what about the bond market? And here we are. Same story. Valuation is extremely low. What this means is that investment grade spread, what you get for investing into a corporate or a mortgage or high yield or any of these bank loans, it's the lowest yield above treasuries that you have over this period. And so that's where this deviation is. And you can see this bar chart or the candle charts, we're on the lowest yield where, up top is where you're actually compensated for some of the risk. So this is the area that makes us nervous, that, all of our managers and some of the performance that we have, which Josh alluded to, going forward when spreads are this low, it's very difficult. These bonds rarely go through treasuries. So as you get closer to the treasury market, there's very little added value. And as you all know, we're very low on the yield spectrum in general. So what could change this kind of paradigm where we are? And one of the big things that we're focusing on right now is inflation. So everyone knows deflation or disinflation has been the #1 issue for all of these years, and bonds have really performed. And what I would argue is that the market could be underpricing this risk. And this is something we're really focusing on, because this makes zero sense to me that this chart is of the real yield chart, which shows that real yield, so the nominal inflation, what we get in a 10-year treasury, minus what the market is forecasting in 10 years, which is a 10-year tip, is minus 100 basis points. And you could see this over the last 20 years, we're the lowest ever. But now as we're expanding out of this, and some people are arguing that this year's, Goldman Sachs just put out a report, they think that we're going to be at 6.6% GDP this year. We haven't been above 5 since 1984. So if we are growing, even with this COVID problem, with this type of growth, how can we have such negative real yields? And if we do see a normalization of this back up to 1.5%, our bond market would get severely hit. And so that's really another something that keeps me up at night and just makes me very nervous, that if we do normalize here, this could be problematic. And so, again, we look at all kinds of these different models, but some of the models are, flashing warning signs just on the equity side. These various things that we look at, inventory sales ratios, prices paid, all of these different things are flashing, warning signs. Commodity prices, as you know, they used to say, oh, beans to the teens. Well, we're well into the teens on soybeans, but you're seeing it in copper and all across the metals and so forth. And, people are saying, oh, well, the commodities are warning that inflation is coming. But I just wanted to show this chart. This is the Dow Jones Commodity Index. We have barely even moved. So if they're thinking that inflation could be problematic now, if we just normalize here, that we could see a much higher inflation number than what the market is forecasting. The other component is housing, And housing is a third of the CPI. And as you know, housing has come up dramatically. Lumber prices have come up. So there's a lot of things that we're just focusing on and very concerned with. So that's it for kind of, just the concerns of what we're looking at. And I just wanted to go over performance a little bit. So this is these are all of the managers that we have that we look at versus the benchmarks. And I just kind of wanted to show you last year, we were able to produce a little over 80 million in alpha, which we thought we did a very good job. And I just want to talk about those different managers and things that we had talked about. So our equity managers have done extremely well. And as you can see, they produced 64 million in alpha above the benchmark. But I want to highlight the one, Van Berkom, the minus 22 million. And they're the small cap manager. And if you remember that chart that I showed you, they don't buy that, they buy value. They're deep value managers. And so this 22.6 million underperformance is because of that 5% rally in the garbage that's really moved up some of these things. So this is an instance where we're saying, hey, Van Berkom, we firmly believe in what you're doing. When the market normalizes or what have you, and these companies that are really problematic and many of them will go bankrupt, they're gonna have issues. This would be a manager, an example of when we would say, okay, we want to add to Van Berkom because we believe when things normalize, they will outperform. The hedge funds, kind of a similar story. Most of the funds that we have are more of the value funds, and so they don't chase some of these stocks that have really moved up, and so that's hurt us a little bit with some of the funds. But we feel very comfortable with the managers that we have, and we feel that they will outperform over time. On the real estate side, the only one that has been problematic is UBS, and they've been problematic for every quarter, every year over the time since I've been here anyway. But as you know, we're locked in. We are trying to get out, but it just takes a lot of time. So it'll take time before we can redeem from UBS. On the fixed income side, we're up approximately 20 million in alpha. So that gives us a total alpha of 80.7 million, basically, that we're above our benchmark. So we're at last year's total, which we're very pleased with this performance and happy that we're able to get here. But I do want to caution with, especially in the fixed income side, there's very little more room for, the PIMCOs of the world or what have you to get additional income with the spreads being so tight. Just one last thing, the COVID situation is obviously, the main focus of when the economy comes back. And one thing I just want to highlight that I think is kind of lost on many of the market participants and everyone else is that we have 5 vaccines now. And, the bottom line is with all of these vaccines that have public results, we've basically eliminated deaths and hospitalizations are down dramatically. So a lot of the new studies that are coming out with, 1.1 billion doses that the US has already purchased, compare that with 120 million who had the flu vaccine. We are well on our way. And yesterday, I was just listening to a Goldman report that they think by April, we're going to have a large surplus of vaccines that we won't be able to distribute on time. So, I just want to be, not negative on this, but if in fact we are able to get this and we get the vaccination and able to return to some type of normalcy, that's another factor where the economy could really grow, especially with the stimulus that's supposedly coming in. So, some negative news on valuation. It's just difficult. But we're really positive on what we've done over the last 6 months and where we're headed. So with that, I'll stand for any questions.
Thank you, Patrick. Are there any questions for Patrick? I do have one, but I want to let anybody else.
Well, Governor, I guess the one thing that I wanted people to draw their attention to, and Patrick, you as well, comment on, is looking at our top holdings and looking at the benchmark. This goes to the realization of what the bond yields actually are We've got billions of dollars with very low yielding assets. And I do agree with you that inflation is going to kick up. And I don't think the Fed has a really good chance of manipulating the long end of the yield curve, and that probably the longer term bonds are going to go up with the markets. And I don't know if people really understand the risk associated with that. We've talked about it. I know Josh talked about it, but could you kind of reinforce what happens when those interest rates go up and the duration problems that you can't have with longer term bonds?
Mr. Chairman, Treasurer, that's an excellent point. And we keep harping on this, but you're talking about 11 basis point 2-year. And the long end is now almost up to 2% in 30-year bonds. But with that, the duration that you have extends out, and I've presented before about how the aggregate is a 6-year duration. So what that means is every 1% move in interest rates, the core bond portfolio, which is the bulk of our portfolio, you can see on this chart here, that PIMCO, these are core bond managers, we would lose 6%. Now on the long end, it's even a much more dire position where you're talking about an index that is closer to 20. So that means you lose 20%. If we go from 2% long yield to 3%, or the index moves up 100, we would lose 20% in that portfolio. Now, when you're looking at workers' compensation, it's hard to kind of grasp, where you're not really looking at trying to capture that, and you're worried more about the movement in yield. What you're worried about is your liability. And so we've hedged off that liability. So even if we have significant losses in the workers' comp, we've still mitigated that liability, and that's the main focus there. But as the treasurer mentioned, the way we look at it is really, I think, problematic in the sense where what we call equity, for instance, the first chart that Josh showed, where the hedge funds have a 7% vol, and yet the long duration fixed income has about a 19 or 20% vol, and yet that's the risk or the safe investment. So it doesn't make sense that we classify a very risky bond as fixed income when we should really be looking at the risk of the portfolio. And that's the one point that the treasurer is pointing out and working so diligently on, is to let's try and measure our risk and not call it by something, because the classification, I think, is problematic, where there's various things that we could look at and say, well, what is the risk of the portfolio, as opposed to saying this is an equity or that's an equity just because this is how it's been classified. So that's an excellent point. And I know in the meetings that we have for the Slib, we will be talking and pointing about that. But as the governor mentioned before, at this time, we still got to be very, very cognizant about increasing risk in relationship of what kind of reward or returns are available at this time.
Thanks, Patrick.
Thank you. Further questions? Patrick, my question really goes to, I understand the comment you're making about inflation and the challenge there. The really sort of unfortunate thing about the debt load that our country is now carrying is that the Federal Reserve is not, in my opinion, able now to act as independently as it once did, simply because a rise in interest rates. And I also point out that I think that as these rates is so low at this point, that any move is magnified over a higher rate. You just have to have a bigger bump. So the circumstance is very real, but the Federal Reserve cannot let inflation rise. They don't have that many tools to do it, but they interest on the national debt, which has just gone astronomically high recently, is something that is particularly problematic for the country, for the Federal Reserve, and for our fiscal situation.
Mr. Chairman, that is spot on. And that is the concern. How in the world? So getting back to that real yield chart that I showed you at minus 100. Well, the reason being is the Fed has been buying $80 billion of treasuries every month, boom, 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 boom. So they are keeping that even, they can't keep the 30-year as going up, as the treasurer mentioned, just because that's not in their purview of the purchases. But now there's talk of issuing a 50-year. So we're forecasted to be in 115% debt to GDP. With the way that we're going, it's going to be very, very, very difficult for that to come down. So where is the escape valve? Those are the things that we keep looking at. And the only thing that I think is politically plausible, you're not going to default. You can't increase, taxes dramatically. All the normal things that you would do. What's the escape valve? Well, you deflate your way out of it. So the inflate, not deflate. You inflate your way out of the debt. And so that's the best political way to get out of a debt issue. But I don't see, and this is very, very long-term, 5 to 10 years, which we're going to talk about it, but I don't see how we can get out of this debt issue. And the MMT, modern monetary theorists right now, point to where our debt servicing costs are very low in relation to our GDP right now. And it's like, well, of course, because rates are so low, but if they go up, which the Fed has stated that we're willing to let inflation run hot to get the average above 2%. So you're spot on. These are all the things that just really scare me. And I don't know, what will cause it. But if we have 6% growth and some of these inflationary things coming through, I do not believe that the Fed is going to stay on hold and will have to react. They cannot let inflation run away because debt service costs would wipe out the budget. So yeah, that you go through every avenue of where it comes through, and to me, letting the dollar slide and letting inflation run is the only most viable way out of this. It's a long-term deal. It won't happen, overnight, but that is a big, big concern on our part.
Thank you. Further questions for Mr. Fleming or the treasurer? Mr. Treasurer, Mr. Fleming, thank you for your work, and thank you for continuing this tradition of really excellent conversation and great materials. So, Mr. Treasurer, are there other matters to come before us?
I don't believe so, Lisa. I think that wraps it up, doesn't it?
Yes, sir. Mr. Chairman, Mr. Treasurer, that's correct.
Good. I didn't miss anything, Mr. Chairman. We're done.
Thank you, Mr. Treasurer. So, Director, back to you.
Mr. Chairman, that brings us to K1 and 2, which is the Board of Deposits. I would again yield the floor to the treasurer for those matters.
Mr. Treasurer. Mr. Treasurer, you are muted, it appears.
Okay. All right. Yeah, Mr. Chairman, you should have a summary of bank deposits and collateral as of the end of the year. This is for information only. Lisa, can you share that screen?
You bet.
Yeah, we're over collateralized, Mr. Chairman, substantially. We got a collateral value of about 346 million, and the account balances are of a little over 105 million. So we've got plenty of collateral in banks for the the TDOA program.
Thank you, Mr. Treasurer. And I know we didn't really discuss this before the meeting, but I think at the next meeting, I'd love to look at the necessity for that extension on the TDOA program that we did last year at the beginning of COVID, just to understand if we need to make any adjustments there for you on that. Again, don't have to say anything here, but I just wanted to put it on the list if it's appropriate.
Okay, Mr. Chairman, we'll look into that and have a recommendation.
Thank you. I think you have, I think we have a board matter next too on TDOA rates.
I have no teachers. It's like they just want to play around.
Okay, can you get that up, Lisa? Okay, Mr. Chairman, this is our standard recommendations on TDOA rates. It's not a COVID rate or anything like that. It's a standard recommendation that we use the average 1-year T-bill, and it has a floor of 0.25. And so the rate for the fourth quarter, the TDOA contract to be effective April 1 through June 30th is recommended at the floor rate of 0.25%.
Mr. Treasurer, is that a motion?
Yes, Mr. Chairman.
Thank you. Is there a second?
I'll second, Mr. Chairman.
Seconded by the auditor. Thank you. Is there any discussion? Hearing none, all in favor signify with the thumbs up. I have thumbs up. Madam Director, I think that motion carries. Thank you.
Thank you, Mr. Chairman. That concludes our agenda today for the State Loan and Investment Board. So with your leave, we would convene as the State Board of Land Commissioners.
Let me just ask, I'll say we are adjourned as the State Loan and Investment Board. What's the pleasure of the board? Do you want to take a brief pause of 5 minutes or so, or do you want to steam right into the Board of Land Commissioners? I see a thumbs up from Treasurer Meyer asking for a pause. What about Superintendent? That true too? Okay. Madam Director, I see it's about 16 or so, 17. Let's be back on time exactly at 9:30, if that works for you.
Thank you, Mr. Chairman. Yes, we will return at 9:30.
Thank you. Director, I think we're back. Thank you. I have Superintendent Balo on the screen and Auditor Racinas. I'm waiting for Treasurer Meyer and the Secretary. We'll wait a minute longer. I do recognize we have a quorum, but I still would like to see if we can.
Certainly, Mr. Chairman, we will stand by.
I see the Secretary has, or Treasurer Myers rejoined us. Secretary has not. Let's proceed. We do have on the screen now Superintendent, Auditor Racinas, Treasurer Meyer, and myself.
I'm here. I just don't know why you can't see me. Can you hear me?
We can hear you, Mr. Secretary. Thank you. So let the record show that we have a full quorum, and as we convene the State Board of Land Commissioners.
Mr. Chairman, the first item on the agenda for the State Board of Land Commissioners is approval of the minutes under A1 and 2. We have the November 5th, 2020 State Board of Land Commissioners meeting minutes and the December 3rd State Board of Land Commissioners meeting minutes.
So members of the board, are there any corrections to either sets of minutes? Mr. Secretary, your camera came on. Looked like you were trying to say something. We can't hear you.
No, I was talking to tech because we were wondering if the video was up, but you can see me now?
We can see you now.
Oh, good.
Thank you. Any corrections and comments on the minutes? Members of the board, I would entertain either a motion individually or a motion jointly on the November 5th and the December 3rd State Board of Land Commissioner meetings.
Mr. Chairman, I
Superintendent.
would move the approval of both sets of minutes as stated.
Thank you, Superintendent. Is there a second?
Second, Mr. Chairman.
Been seconded by the auditor. Is there any discussion? Hearing none, all in favor of approving the minutes, signify a thumbs up. I've got thumbs up from the superintendent, the treasurer, the auditor, and the secretary. So that motion carries. Madam Director, next matter.
Mr. Chairman, again, we've provided the board with the usual reports behind tab B. We do not have anything further to add at this time, but would stand for any questions.
Members of the board, any questions on the matters that are behind tab B, the reports behind tab B? I see none. Madam Director, next item.
Mr. Chairman, we've provided the materials for this meeting in advance and have briefed each of the board members individually prior to this meeting. At this time, I'm prepared to propose a consent list if the board would so desire.
I think the board would like that. So your consent list, Madam Director, proposed. Thank you.
Mr. Chairman, I would propose D1 through D5, E1 through E5, F2 through F4, G1 through G3, H2, and I1.
So, Madam Director, I hear the proposed consent list is D1 through 5, E1 through 5, F2 through 4, G1 through 3, H2, and I1. Is that correct?
Mr. Chairman, that is correct.
All right, thank you. I would entertain a motion for a consent list.
So moved.
It's been moved by Secretary Buchanan. It's been seconded by the superintendent. All in favor of the consent list as described, with thumbs up, please. That motion carries. Madam Director, I will now entertain a motion to accept the director's recommendation on the matters that were on the consent list.
So moved.
That's been moved by the superintendent. Is there a second?
Second.
It's been seconded by Auditor Racines. Any discussion? All in favor of the director's recommendations on the items on the consent list, thumbs up or an aye? Thumbs up across the board. Madam Director, we are ready for the next matter.
Mr. Chairman, that brings us to C, policy matters. First, we have C1, which is to consider an extension of the emergency rules for the State Board of Land Commissioners Rules and Regulations, Chapter 4, Grazing and Agricultural Leasing. I would yield the floor to Deputy Director Crowder to explain the reason for the extension.
Thank you, Madam Director. Deputy Director Crowder.
Good morning, Mr. Chairman, members of the board. As you recall, back in October, the board approved a set of emergency rules to its Chapter 4, which is our grazing and agricultural leasing rules. The emergency rules were specific to add a Section 6, leasing of vacant land, to that chapter. As you may recall, really what the rules did was follow the board or the office's historic practice in leasing vacant lands, wherein it would offer lands that didn't have an existing agricultural or grazing lease for bid in a specific manner. And then if it received 2 or more applications for the same parcel, we would consider those to be in conflict, and we would operate under Chapter 1 process rules to handle that conflict. These rules were a little bit more specific in that the director, when trying to understand which of the applications to accept in issuing her decision, she would look at the qualifications of the applicants under the provisions of 36.5.101, which are the basic leasing principles for agriculture and grazing leases, the rentals offered, and then any attributes of the applicants that would inure to the greatest benefit of the beneficiaries. If there were equal rental offers, then the director would look at a next set of criteria, which is the applicant a bona fide resident of the state of Wyoming? Was the applicant authorized to transact business in the state? Does the applicant have actual and necessary use of the land and the forage? And is the applicant an owner, lessee, or lawful occupant of adjoining land to the vacant land? And if in those cases, the director found everything to be equal, then we would move on to a final bid to be asked for at a live oral auction. Mr. Chairman, we've employed that based on the direction of the board back in October to only be utilized in leasing the Mosque property in Crook County. We've largely completed that process. We've issued director's decisions to the applicants and are awaiting final acceptance of those directors' decisions by the winning applicants, and also are waiting an appeal period. There's a 30-day appeal period with those directors' decisions. Unfortunately, we won't be able to finish that appeal period before the expiration date of these emergency rules. And so what we're asking the board today to do is to extend these emergency rules for another 120 days so that we can finalize the Mosque vacant land process under the same set of rules.
Thank you, Mr. Deputy Director. And I see Treasurer Meyer has his hand up. I'll recognize Treasurer Meyer. Mr. Treasurer, if you're speaking.
Yeah, I'm unmuted now. I get a question as far as the status of the appeals. Would an adjoining landowner have the opportunity to appeal if they did not have an equal I guess offer? It's so unusual to have the exact same offer that it seems like it would probably never happen that somebody bid $6.47 and somebody else bid $6.47. So it seems like the appeal process could be limited. I'm wondering, would they have a statutory appeal because of the language in that says in all instances a adjoining landowner has a preference as the rules are set out?
Mr. Chairman.
Director, go ahead.
Mr. Chairman, Treasurer Meyer, that is the premise for the appeals that we have received to date before the emergency rules were put into play. These rules really do provide, or the intent was to provide, a very clear playbook on how we would manage the process of leasing vacant land. But in the past, individuals who felt like we weren't interpreting or employing the existing statute appropriately did appeal the director's decision based on exactly what you just mentioned. And I don't believe that these rules hinder them from doing that if they'd like to.
Yeah, Mr. Chairman, follow up. I had felt in the competing or conflicting bids that the threshold was not that they were equal, that they were only bids that were over the base amount or the market amount determined for the vacant land.
Mr. Deputy Director.
Mr. Chairman, Treasurer Meyer, these were the emergency rules that we presented to you in October. We haven't changed any of the language within them.
Yeah,
we haven't started the regular rulemaking process, and we are working to employ the additions that you brought up at that meeting into that regular rulemaking process for public comment.
Yeah, Mr. Chairman, I'm just curious about the process for conflicted leasing now as far as the threshold, because this threshold seems as if it's impossible to meet, that they had to be the same. I'm speaking to previous to these emergency rules, so I have a perspective that previously the conflict, if somebody to be eligible, you would have to and get a preference, you'd have to at least make a minimum bid that the department determined was the market value for the parcel.
Mr. Chairman, Mr. Treasurer, that is correct. We utilize the board's approved formula to determine that minimum bid amount, and only applicants who bid at least that amount are eligible to lease or be considered in the conflicting application process.
Okay, but in this particular conflicting application process, they have to have the exact same amount bid. Is that a true statement?
Mr. Chairman, Mr. Treasurer, we consider applications to be in conflict if we receive 2 or more applications to lease the same parcel of land and they've met all of the minimum thresholds to be an applicant. There has always been the ability for the director to make a decision based on other things besides just the rental offered. In these rules, we clarify that to be attributes of the applicant that inure to the greatest benefit of the beneficiaries. But the director has always had the ability to make her decision based on other attributes other than price. It just has 100% of the time, or at least 99% of the time, been the case that the highest bid is inured to the greatest benefit of the beneficiaries.
And so, Deputy Director, if I understand your response, the answer to the Treasurer's question is yes, if somebody has the ability and it's not exactly precisely the same bid, the Director has latitude to be able to consider that.
Mr. Chairman, that's correct.
Okay, yeah, Mr. Chairman, I had thought that I had heard the language the same bid, and that was problematic as far as ever having a ability to appeal. But I'm looking forward to any of the proposed language to, I guess, address the conflicts that we've had in the past of that one section about, in all cases, the adjoining landowner has preference. So I'm looking forward to seeing what the department has been able to suggest. Thank you, Mr. Chairman.
Thank you, Mr. Treasurer. And Deputy, just to reiterate, I think the issue before us here with extending these emergency rules really allows the process that began on the Mosque under these emergency rules to fully roll out under the same set of emergency rules. And the more complete regular rules will be considered and can take into account the treasurer's concerns here.
Mr. Chairman, you're absolutely correct. We haven't employed this process for any other vacant land and won't until the regular rules are finalized.
Thank you. And if I remember correctly, Deputy Director, it was because it was a somewhat urgent situation to get these lands settled. Before spring. So I appreciate that. Is there further discussion? Further discussion? Seeing none, I would entertain a motion to accept the director's recommendation on board matter C1.
Mr. Chairman, I would move the director's recommendation that the board find it necessary to extend the existing emergency rules by 100 and that the board does extend the existing emergency rules for Chapter 4 by 120 days.
Thank you, Madam Auditor. It's been seconded by the superintendent. Is there further discussion? Is there further discussion? Hearing none, all in favor signify with a thumbs up or an aye. Madam Director, I see that every member has approved that. So thank you.
Thank you, Mr. Chairman. The next item on the agenda is C2, for the board to consider authorizing the Office of State Lands and Investments to proceed with the regular rulemaking process to amend Board of Land Commissioners Rules and Regulations, Chapter 9, governing fire danger closures. We have State Forester Bill Kraxer with us today. I would yield the floor to him to provide the board with more detail concerning that matter.
Thank you. Mr. Kraxer, it's good to see you. And I really hate the fact that we're talking about fire and it's the middle of winter and we have virtually no snow in the state.
Thank you, Mr. Chairman, members of the board. A couple of years ago, county fire wardens from around the state approached us and asked us to look at our fire restriction rules. The last time these rules were opened and modified were about 25 years ago. They're somewhat archaic. The concerns that county fire wardens have was the terminology is totally different from where our federal partner agencies have their fire restriction terminology. And they were wanting us to move forward with some common use and common use of language while we're moving with our rules. My staff's worked really close with county fire wardens and our federal partners, and we think we've got a pretty good path forward to modernize the rules and come up with that common language. So what we're doing today is asking for your authorization for us to open the regular rulemaking process on the Chapter 9 rules and move that process forward.
Thank you, Mr. Kraxer. Are there questions for Mr. Kraxer? Are there any questions? I would just note, I made this comment to Mr. Kraxer when he briefed me the other day. It's always nice to have the federal government's clarification. Stage 1 means a lot more to me than full closure, as does Stage 2 means a lot more than partial closure. It's nice that I'm being somewhat facetious, but I appreciate that putting the language together makes some sense. With that, if there is no further discussion, I would entertain a motion to proceed with regular rulemaking.
Hey, Mr. Chairman.
Mr. Treasurer.
Yeah, I move that we adopt the director's recommendation that we find it necessary to, well, I'm on C1. I'm sorry, I apologize. I've got to get the right tab, but I moved the director's recs on the matter before us on the authorize the Office of State Lands and Investments to begin the regular rulemaking authority process with the attached draft rules to amend the Board of Land Commissioners rules and regulations on Chapter 9 governing fire danger closures.
Thank you, Mr. Treasurer. That motion's been made. Is there a second? It's been seconded by the superintendent. Any further discussion? Any further discussion? Hearing none, all in favor, with proceeding with regular rulemaking, thumbs up. I have from the superintendent, the treasurer, the secretary, and the auditor. Madam Director, that motion carries. Mr. Crapser, thank you very much.
Thank you.
Thank you, Mr. Chairman. The next item on the agenda is F1, to consider applications for bentonite lease renewals. It's the director's recommendation that the board approve the applications listed in board matter F1 with the standard stipulations and to allow the issuance of the leases effective February 2nd of 2021. We are aware that a Mr. Kim Kling may have some comments to make to the board and objects to the issuance of these lease renewals. We did provide the board with a copy of his written comments yesterday. And I would yield the floor to Ms. Dyer, the Assistant Director of our Trust Land Management Division, to provide any further color on this. And I believe Mr. Kling may be on the line to make his comments.
Thank you, and I'll let Ms. Dyer address the board. Then I will ask for any questions of Ms. Dyer or the staff from members of the board, and then we'll proceed. So, Holly, good to see you this morning. Thanks for being here.
Good morning, Mr. Chairman and members of the board. So to sum up, Director Scoggin summarized it pretty well. Our office has been engaged with Mr. Kim Kling for quite some time, and especially through the last couple of months as we've been working through some of his concerns on a couple of these bentonite lease renewals. So the bentonite lease renewals are for 2 leases that American Colloid has submitted their application for, and those 2 are specific to Mr. Kim Kling's concerns, as I understand. I'd be happy to help answer any questions about OSLI's involvement. We had a field representative, Mr. Dave Archer, meet with Mr. Kim Kling last December, and I'd be happy to answer any questions that anyone may have at this time.
Thank you, Ms. Dyer. Are there questions from Ms. Dyer or for the staff from members of the board? Any questions?
Yeah, Mr. Chairman?
Yeah, Mr. Treasurer.
Yeah, quickly, when you were kind of giving us some information on this, I think you had an idea about how many dollars have been set aside for reclamation by this company. I was just wondering if you could let that be known.
Mr. Chairman?
Please, Ms. Dyer.
Mr. Treasurer, yes, we did engage we touched base with DEQ, Land Quality Division, to make sure we had an understanding of their active bonds that they have in place for reclamation. American Colloid Company has about $18 million posted in active bonds with DEQ. And then in addition to that, we also have lease bonds that are required for each of these leases. And American Colloid Company does currently have an active blanket bond held by our office.
Follow up, Mr. Chairman. With these bonds, is there any requirement to have any type of a reclamation plan or a time schedule or anything like that? I'm not sure of the process, and I don't know whether you know the land quality issues or reclamation issues. So.
Mr. Chairman, Mr. Treasurer, we do require that they abide by all state agencies' laws and regulations, local rules, laws and regulations. And DEQ does require each year a revised plan of their mining operations for the projected year to come. And then with that, they also require a revised and updated reclamation plan to account for whichever development they are planning on pursuing within the next year. So each year, the company is required to submit a new revised reclamation plan and mining plan.
Okay, thank you very much. That's been very helpful.
Thank you, Treasurer. Further questions? Madam Director, I think you mentioned that Mr. Kling may want to address the board.
Yes, Mr. Chairman, that's my understanding. And perhaps Mr. Bump can let us know if Mr. Kling is on the line.
Mr. Chairman, it appears that Mr. Kling is on the line and he is able to now speak.
Thank you, Mr. Kling. The floor is yours.
Thank you. Thank you, Mr. Chairman. Can everybody hear and see me, I assume?
We can hear you. We can't see a video image of you, or at least I cannot. But we can hear you fine.
Give me just a second here. There's no video option. Well, it looks like I do not have a video option, but Mr. Chairman, I do thank you for the opportunity to address the board here today. I understand everyone has received and read the written comments that I prepared for you at this meeting. Let me start by saying that I'm not against mining. I was employed in my earlier years by the bentonite industry after university graduation as a business manager and have done extensive contract work for the bentonite mining industry in our area my entire life. My son is currently pursuing a PhD degree in mining engineering at the South Dakota School of Mines, so I'm definitely not against mining. I am also a rancher and would like to think a fair steward of the land. What brings me here today are a couple of bentonite renewal leases on state land that are located in very difficult areas to mine. My written comments give more detail, but bottom line is that I can show you similar ground that I myself helped mine 40 years ago that still today looks like a moon landscape with very high erosion. This is after reclamation was performed similar to what we are doing today. I would like to think we could learn from our past endeavors and possibly do a better job if mining is to be attempted on such fragile ground. A second issue here today is exploration drilling done by American Colloid on these leases without notice to me, the grazing leaser, or surface impact payments being made to the state for that drilling. An adjoining state lease that has already been mined on had the same type of notice given to me when mining started. The boundary fence was cut and digging commenced before I found out they had started to mine without a surface impact payment agreement in place or a new fence installed. The surface impact agreement at this time is still under deliberation. So my experience to this date is not that good, and American Colloid hasn't been exactly following your rules. This brings me to what can be done. As a former county commissioner for 16 years, I like to look for reasonable solutions on complicated issues and would propose the following. Deny the bentonite lease renewal applications for American Colloid here today. But secondly, ask American Colloid to submit a new mine application for these two leases, granting them an effective date as of today, February 4th. This would keep these leases in their possession and ownership if they choose to apply. What it would allow for is for a new mine and reclamation plan to be developed for these two specific leases and give the state and interested parties a chance to take a closer look to make sure they want to mine these two areas. If mining is found to be feasible, Hopefully, an improved reclamation plan has developed out of this process for the special circumstances surrounding these two leases. In reality, I'm really fighting for the state's best interest, asking that you proceed with caution and use a responsible and reasonable approach to serve all the parties involved. I do thank you for allowing me to speak here today and would try to answer any questions you might have.
Thank you, Mr. Kling. Truly appreciate your comments. Let me open this to the board for any questions. Are there any questions for Mr. Kling? I don't see any questions. Madam Director, do we have anyone from Department of Environmental Quality online with us?
Mr. Chairman, I do not believe we have anyone from DEQ with us. Ms. Dyer was going to reach out to American Colloid. I'm not sure if they have somebody on the line or not. Ms. Dyer, perhaps you could update us with respect to that.
Mr. Chairman, we did reach out to American Colloid, and I don't believe that they were able to register in time. It doesn't appear that they're on the attendee list. And as far as DEQ context, Dick Shaner and I, Dick Shaner is our mineral leasing supervisor. We had a lengthy conversation with Kyle Wentland, the administrator at Land Quality, last week, along with Kimber Wickman, to understand American Colloid's standing with their office and understand bentonite mining requirements in DEQ's eyes altogether. And so in those conversations, they did not have expressed any concern over American Colloid or their reclamation plans. And they are unfortunately not, we don't have Kyle Wentland or Kimber Wickman here with us today.
Thank you, Ms. Dyer. So seeing no questions, and again, Mr. Kling, thank you very much. And thank you for your service as a county commissioner. I truly appreciate all the work you've done. Growing up in bentonite country as I have, I know exactly some of the considerations you have. I grew up in KC, and Gary Shepperson was a close friend, and I know a commissioner along with you. So I want to give you another chance to add anything, but just appreciate you being here.
Thank you, Mr. Chairman. I have nothing further to add. I just made the proposal for a possible solution that might help in this situation, and I thank you for your consideration in this matter.
Thank you very much. Mr. Secretary, I see you're unmuted, and I see the treasurer has a quick question. Mr. Secretary, do you have something you wanted to add?
Yeah, I just, in looking at this, I would like to have folks that have specific information about how amenable this land is to reclamation. I kind of feel like, as a board member, we're presented this information, and it would be nice to hear from DEQ or this individual that was mentioned in Mr. Kling's letter to us, Dave Archer, who apparently came out and visited and viewed the area in December. I feel like I've got conflicting information, and I'd like to know that no, indeed, this land is amenable to reclamation, and that it's a wise decision on my part to vote to renew these leases, because I just feel like I've been presented an issue by a member of the public, but I really don't have any information to say to counter that information that makes me feel good about making a decision today.
Thank you, Mr. Secretary. Treasurer Meyer.
Yeah, thank you, Mr. Chairman. You know, I think one thing that's on the face of it, we can all understand that bentonite land is, you know, fragile land undoubtedly, and mine bentonite land is just as fragile, if not more so. And, you know, with the representation that Mr. Kling gave us, I think that even emphasizes those two statements. But it seems like maybe we should look at the problem on a larger basis and have the maybe ask the DEQ to review, you know, the reclamation success that mines have had over the course past several decades, or at least over the past time of the current reclamation plan implementations, if there hasn't been any changes, because it just sounds like we need to do a better job on bentonite mine reclamation, and understanding it's almost impossible in many circumstances to get you know, the state of the land back to a usable state. But I did say almost impossible. So, Mr. Chairman, to the extent that through your executive branch that you could ask for some, I guess, an update of what's happened, the effectiveness of it, and any changes that might be successful. Perhaps the range management people at UW could give us some other insights on it too. I think that it seems to be, I think, a real problem that Mr. Kling has, but it's not necessarily just on this parcel. I think it's something that deserves a broader look at. Thank you, Mr. Chairman, for your indulgence.
Thank you, Mr. Treasurer. Further comments, further discussion?
Mr. Chairman, if I may.
Yes.
A couple of things. I wanted to just point out that these two leases that Mr. Kim Kling is a grazing lessee on, they are part of a larger permitted area that's permitted through DEQ's process, as I understand. So the entire mine that's permitted is about 45,000 acres. And as I understand, this is why DEQ requires a revised mining plan each year, because they want to make sure that they understand which part and which specific area the mining company is planning on pursuing in that projected year timeframe. And so that's where these two leases that American Colloid has with these renewals that they're requesting are currently in a prospecting status. So they are not producing, they are undeveloped, and they are part of that general larger mining permitted area, and would be definitely subject to the plan requirements that DEQ requires each year that American Colloid submits. And I did want to touch on, there was one other lease that we had with American Colloid that is not on this board matter, and that's because it is actually in its final stages of reclamation. And so that is a lease that we are so they have started the reclamation process. Dave Archer, our field representative, had gone out there and completed an inspection this December, and noted that we need to keep an eye on it to make sure that the reclamation does fully take place and is successful before we release any of our bonding requirements. So that's one of these leases that's in this area related to this topic, and I wanted to make note of how it fits into our normal inspection procedure.
Thank you, Holly. Appreciate that comment. So members of the board, just in terms of pacing on bentonite. I know you're all aware that bentonite's used for a lot of different things. It's used for drilling muds. It's used for kitty litter. It's used for cosmetics and so on. And as the demand rises and falls, the pace of mining also rises and falls. I guess, are there further comments, considerations? Hearing none, I'd entertain a motion from the board. If the board has a particular motion to make, I would entertain it at this time.
Mr. Chairman, I would move the director's recommendations for approval.
I'll second.
Thank you, Mr. Treasurer. It's been moved by the treasurer, seconded by Auditor Racinas. Is there further discussion? Mr. Secretary.
Thank you, Mr. Chairman. And this is for somebody on our staff at State Lands. Perhaps you could quickly outline for Mr. Kling the future process under which he could, public comment period, anything else that could give him the opportunity to voice his concerns during the process, since from what I'm hearing, this isn't, going to be mined in an imminent fashion. I would feel better about him knowing that process before I personally would move forward on this.
Thank you. Ms. Dyer, are you aware of that process?
Yes, Mr. Chairman, Mr. Secretary, good question. So on these particular leases that Mr. Kim Kling is a grazing lessee on, we do require that the grazing lessee be notified prior to that lease being developed. So the American Colloid will need to notify not only our office, but make sure that Mr. Kim Kling is aware of when they're planning on going into these lands. I do understand that has been miscommunicated in the past, and so we hope that we've corrected the problem moving forward. Additionally, if there are test holes that are being dug, I know that was one of Mr. Kim Kling's concerns, was that the grazing, as a grazing lessee, he was not being notified of these test holes. The American Colloid Company, we have reached out to them to make sure that they do understand these test holes need to be permitted under a separate use, so it would be a TUP typically, and so that would also require that the grazing lessee is notified, and we would be happy to help facilitate those conversations moving forward also. As far as from DEQ's perspective, as I understand, their permit was issued some time ago, and so they are statutorily required to solicit public comment from adjacent landowners and I think just public comment in general. And so that time has obviously passed, as that permit is still in good standing right now at DEQ. So I do believe that there is, I think their office is always open to public comment, as I understand, but I don't think that they're statutorily required to necessarily solicit comment on any reclamation plans at this point.
And just to follow up, Mr. Chairman,
Yes.
And again, I don't want to stand in the way of this. I mean, can you represent from your conversations with DEQ that they are perfectly happy with the current reclamation plan? And I think the reason I asked the question, or I have some concern, is Mr. Kling mentioned that there had been other actual reclamation under the same plan that I think he described it as a moonscape. Now, maybe that's acceptable. I don't know. I've never laid eyes on it. But are we satisfied that the reclamation plan we have in place is adequate for the entire purpose of reclamation? That is to protect the environment and to, restore the land. So if you can represent that to me from DEQ, that would go a long way for me, short of having DEQ on this call to kind of inform us of those same issues.
Mr. Chairman, Mr. Secretary, I hate to represent an agency that I don't work for, so I want to be a little bit hesitant there. But from our conversations last week, DEQ and the administrator, Kyle Wentland, he did explicitly express that he did not have any concerns about American colloid in the state of Wyoming and up in this area up by the town of Colony on these specific mined lands, that they have in the past been very good at completing reclamation in a successful fashion. He did make note that I believe in the 60s or the 70s, there was a time frame there where reclamation was not being upheld to very high standards. And he did say that he needed that land quality has since improved those reclamation plans, and it hasn't been an issue in recent years. I would also defer to Deputy Crowder. He might have a little more institutional knowledge on bentonite mining reclamation up in that area, more years under his belt, and might be more familiar with this situation in DEQ.
Thank you, Holly.
Deputy Director.
Thank you, Mr. Chairman. I think Holly did a great job. It is hard for us to say that DEQ is perfectly happy with a plan. What we do know is that they have an approved plan, and they're not out of compliance with DEQ as we're aware. I'll also note that there is a lot of mining going on in this area. There's a lot of reclamation also going on in this area. So these two specific leases aren't abnormal to the area. And from my personal perspective, if you'd like that, it's one of the prettiest places in Wyoming. It's one of my favorite places in Wyoming. But as the treasurer also mentioned, bentonite by itself is impermeable to water, and it's very hard to have vegetation grow where bentonite lays. And so while we may have trees that have been successful there, we don't have the vegetative density that we have other places. So where it is right now without mining or reclamation is pretty sparse vegetation as well. And what's gotten there has been established over a long period of time. And it's hard to get reclamation to mimic that. And that's a fair statement.
So thank you, Deputy Director. And I would concur with that. A few years back, visited some of American colloid's reclamation and noted that they were working diligently to try to reestablish sagebrush in certain places. And sagebrush in itself is difficult to reestablish, but especially on bentonitic soils. And so I want to share that. Well, with that, is there further discussion? We do have a motion before us. And the motion is to approve the director's recommendation. Is there further discussion? So further discussion? Hearing none, all in favor of the motion as stated, please signify with a thumbs up or an aye. I have a thumbs up from the superintendent, the treasurer, the secretary, the auditor. Thank you, Mr. Kling. I appreciate your concerns. Thank you for coming before the board with a proposed solution. We very much appreciate that, and please feel free to contact the Board of Land Commissioners and OSLI if you have considerations that are of concern. Thank you. Ms. Dyer and Deputy Director, I know today was sort of problematic, but it would be really nice to know in the future and have perhaps somebody from DEQ here, or at least some statement. Thank you. Madam Director.
Mr. Chairman, and just in their defense, we were unclear as to whether Mr. Kling was going to provide comment to the board until kind of the last minute. So that sort of inhibits our ability to coordinate with DEQ, but in the future, we'll make sure that they are waiting in the wings to answer any questions the board might have.
Right, and Madam Director, just to be clear, I wasn't being critical. I just saying thank you for that, so.
Understood, thank you. The next item on the agenda, Mr. Chairman, is H1, which is final consideration of state trust land exchange in Washakie County. We affectionately refer to this exchange as the GREET exchange. I would yield the floor to Ms. Dyer to provide a high-level overview of the exchange for the board.
Ms. Dyer.
Thank you, Mr. Chairman. Members of the board, I'm going to share my screen with you. Can you all see a map of Highway 434?
I can anyway.
Okay, great. So we have, today H1 is for the final consideration of the GREET exchange. We first accepted the application from the GREET family in September of 2018. The application considers an exchange of approximately 160 acres of deeded land for 152 acres of state trust land. And this all is approximately 16 miles southeast of 10 Slib. And we, pursuant to Chapter 26 of the board's rules and regulations, the director at the time, Bridget Hill, accepted the application and moved the application onto the Category 2 list in December of 2018. In the following spring, April of 2019, the board approved the resolution approving agreement to initiate the exchange, which allowed OSLI to begin its normal analysis of the exchange and prepare a detailed analysis after appraisal reports are completed. The detailed analysis was published by OSLI on September 3rd of 2020. And then we did hear, pursuant to the rules and regulations, we did have a public hearing last fall in October. And at that public hearing, we did have one comment. It was from Ms. Marguerite Herman, and it was in support of this exchange. To go into a little bit more detail of this proposed exchange, the proposed disposal is for, and let me pull up a different map here. The proposed disposal is for 152 acres of state trust land, and this land is the horizontal parcel running east to west, right off of Highway 434 here, that's outlined in a thick purple border. It has approximately 63 AUMs on the grazing lease, and the current grazing lessee, I should note, is the GREET family. So they are the current grazing leaseholders of this parcel. And one unique thing about this state trust land is that it does have about 40 acres of improvements that were authorized by the Board of Land Commissioners back in the 1930s. And these were authorized as part of the grazing lease. And it in large part makes a lot of the land of this parcel unusable. So the improvements include sorry, I'm jumping back and forth a little bit. Here are a couple of photos of the improvements that are on the current state trust land. So we have a series of corrals and outbuildings, a tap house. We also have, there is a home site and other various outbuildings. This is in large part, I think this is their private residence. And I believe that Mr. Dan GREET from the GREET family is on the line should the board have any questions for him. And I will jump back to the aerial image here. So moving on to the proposed acquisition. The proposed acquisition parcel is currently owned by the GREET family. It's this sideways T-shaped, lazy T-shaped parcel, and it's for approximately 160 acres. A couple of benefits that we see and were outlined in the detailed analysis and mentioned in the public hearing also is that this proposed parcel, should we acquire it, would increase frontage on the public highway 434. So there's a bit more public access from the highway. We also would have more boundaries that align with the BLM, neighboring BLM land, and then also it butts up to existing state trust land down and to the right of that T. So it would increase public access. We have more highway frontage. Also, we do not, this land is currently undeveloped. There are no improvements out there. It's totally undeveloped and there are no encumbrances. So all in all, we do see that the benefit, the short and long-term objectives would be met by completing this exchange. The state trust land did appraise for more than the private land. And so we would, if the board approves this board matter, it would result in a cash equalization payment of about $5,000. And so we would be able to maintain the current short-term revenue projections by having a similar grazing lease that is estimated at the same AUM rate of 63 AUMs. So the short-term revenue outputs would remain, but additionally, we would have some of those longer-term benefits in mind of increasing public access and consolidating land ownership, which aids in the management of state trust land. And we would be getting rid of a parcel that's highly encumbered by approved improvements and exchanging it for a land parcel that's completely undeveloped. So I did mention that Mr. Greet is present at this meeting if he'd like to speak on behalf of his family and the exchange and help answer any questions that the board might have. But for all of these reasons, the director's recommendation is that the board approve the completion of the proposed exchange and amend the grazing and ag lease to remove the state parcel disposed of and include the Greek parcel that would be acquired. And with that, I would be happy to answer any questions.
Thank you, Ms. Dyer. Let me ask if the board has any questions of Ms. Dyer or members of the staff.
Mr. Chairman?
Mr. Treasurer.
Just a quick one. I don't see the rest of the map there on that state section on the lower right-hand side of the T. I'm assuming that's just a section and that state land doesn't have any public access to it right now. So this would increase that. Is that correct? Or does that extend over to the highway?
Mr.
Well, it looks like it does extend to the highway. So you got an L there. So you don't gain necessarily public access, but you have two ways to get to the new acquired state land there from the L or from the highway. Okay. All right. Thank you, Mr. Chairman.
Thank you, Mr. Treasurer. Further questions for Ms. Dyer or for members of the staff? Seeing none, I see Mr. Greet is teed up and ready to go. Mr. Bump, if you could allow Mr. Greet to address the board, we'd love to hear from him.
Mr. Chairman, go ahead, Mr. Greet.
Mr. Chairman, members of the board, thank you for your time and consideration in this matter. I don't have too much to say other than we feel that this exchange would benefit everybody involved. We do have a private residence on the state land currently, and it's the one that me and my family live in. And so it would be kind of nice to own the ground underneath that, so to speak. My family has been here for on this exact ranch for 112 years and in the area for 132. And we just felt that it would be a good thing to consolidate some land ownership and try and improve the situation for everybody involved.
Thank you, Mr. Greet. Are there questions from Mr. Greet? Questions from Mr. Greet? Mr. Greet, it strikes me that the auditor may be somewhere close to you as a neighbor. Is that true, Madam Auditor?
Yes, Mr. Greet. My family homesteaded, their name was Wood, and they homesteaded, I think, just a few miles of the crow flies. So we might be cousins. You never know.
Possible.
We still have a section there at Bear Creek, so we're not too far away.
Thank you. I don't know if there are any questions from the board. It looks like we're pretty well satisfied. So I would entertain a motion for this matter.
Mr. Chairman.
Mr. Secretary.
I would move the director's recommendation that we approve the completion of this proposed exchange and amend grazing and agricultural lease 3-7104 to remove the state parcel disposed of and include the GREET parcel acquired.
Thank you, Mr. Secretary. Is it seconded? It is seconded by the superintendent. Is there any further discussion? Seeing none, all in favor signify with a thumbs up or an eye. I have the treasurer, the secretary, the auditor, and the superintendent. That motion carries, Madam Director. Thank you.
Thank you, Mr. Chairman.
Thank you, Mr. Greet, for coming to the board, and congratulations.
Thank you very much.
Next matter.
Mr. Chairman, we would now move to H3, which is for the board to consider amendment to an existing restriction to the collection of shed antlers and horns. I would note that on October 4th of 2012, the board approved a restriction to the collection of shed antlers and horns on lands under the jurisdiction of the board. That was reaffirmed by an order of the board on April 10th of 2014. The board's restriction was consistent with the then existing Game and Fish Commission's Chapter 61 rules and regulations, which prohibits the collection of shed antlers and horns on all parcels of land under the jurisdiction of the Board of Land Commissioners west of the Continental Divide, excluding the Great Divide Basin from January 1st through April 30th of each calendar year. This past year, specifically on March 24th of 2020 and January 7th, 2021, the Game and Fish Commission has twice revised their Chapter 61 rules. So now the Game and Fish Commission's rules prohibit the collection of shed antlers and horns from big game animals on public lands west of a line beginning at the Wyoming-Colorado state line at the intersection of US Highway 287, northerly along said highway to US Highway 30-287, northwesterly along said highway to Interstate Highway 80, westerly along said highway to the Pacific branch of the Continental Divide, northwesterly along said divide to the southern boundary of Yellowstone National Park, westerly along said boundary to the Wyoming-Idaho state line from 12 a.m. January 1st through 6 a.m. May 1st of each calendar year. The Game and Fish Department has requested that the board amend its existing prohibition on the collection of shed antlers and horns and adopt the new language describing the area impacted by the prohibition to be consistent with the Game and Fish Commission's revised Chapter 61 rules. So we are recommending that the board approve the amended restriction to the collection of shed antlers and horns by adopting Board Order 2021-1, which is in your materials. And this would make everything consistent also with Wyoming Statute 362107B.
Thank you, Madam Director. I see the superintendent has a question.
Thank you, Mr. Chairman. And I'm not sure that this question is exactly for staff. I'm not sure if there's someone from Game and Fish on, but as I prepared for this meeting and just kind of reading the history and how big of a hobby industry shed antler collection and art has become, I wonder if there is a way that not only state trust land can benefit financially from this by requiring a license or a weight of antlers taken from a particular site. I'm not sure what that would look like. And I don't necessarily know that it's something that state trust lands alone should take. I wonder if staff or someone from Game and Fish knows, are other states requiring a license to collect antlers? And or would the Game and Fish be interested in starting a conversation about requiring that in Wyoming? It seems like, you know, it might not be very much money, but if we followed in sort of the footsteps or used hunting licenses as a bit of a model for that, it might be a good idea to think about that.
Thank you, Madam Superintendent. Ms. Dyer or Deputy Director Crowder or Director Scoggin, any comment on that? And I don't know if we have somebody on from Game and Fish.
Mr. Chairman, we do not have anyone from Game and Fish on the line. However, Mr. Bump, who is our host, has had conversations with Game and Fish. I don't know if that particular issue has come up. And Deputy Director Crowder, I don't know if you're aware of what's going on in other states. Really at this point, our concern with updating the description of the area impacted was, as I understand it from Mr. Bump, was we had people that were rushing over to state lands because there was no prohibition and continuing to collect antlers. So we wanted some consistency, but I would defer to Mr. Bump or Mr. Crowder if they have additional color to shed here.
So let me have Mr. Crowder first and then Mr. Bump and then Superintendent, I'll let you follow up. So
yeah, and Mr. Chairman, I'm sorry to interrupt, but I might be able to save some time if I just put some context on this. I support this motion. I would really like to get the conversation started about how we could better maximize or optimize revenue. So I want to say there's it's not necessary to defend or anything this motion. I'm supportive. I just want to know if we could do some additional work.
thank you, Superintendent. Well, Mr. Crowder and Mr. Bump will let you go ahead.
Thank you, Mr. Chairman. Currently, shed antler hunting is considered a recreational activity. Folks do monetize that if they find good antlers to acquire and do something with, and that's good for them to be able to do that. But currently, we understand it as a recreational activity. Also, in the areas where a lot of shed antler hunting occurs is the Red Desert area, large landscapes. I want to characterize it that way, and not a lot of fences, meaning that it's kind of hard to understand which shed came off of state lands specifically. And so it'd be very hard to try to determine that and charge a fee for it, basically off of the tonnage or amount of weight that was gotten off of state land. I do think that possibly there's an opportunity for a broad license to be acquired for this activity. I don't know of an adjacent state who currently has one. I guess those are my thoughts. And Ben, go ahead if you have more insight.
Thanks, Mr. Bump.
Thank you, Mr. Chairman, Madam Superintendent. That's a good summary from Jason there. I would just add that, no, I don't have any specific knowledge of what some other states do, but I would be happy to reach out to some of our friends in those states and Game and Fish and kind of see what people think.
Thank you, Mr. Bump. And I would imagine since most of Utah seems to come to Wyoming in the spring, that would be an interesting conversation. Thank you, Superintendent. Further discussion? Seeing none, I'd entertain a motion.
Mr. Chairman, I would move the director's recommendation that we approve the revised Duncan Ranch Coordinated Resource Management Plan dated February 4th, 2021 for continued management of ranch resources for both the short-term and long-term sustainability and health of the resource and the trust asset.
Thank you, Auditor. The Treasurer raised his hand just at the same time that you started speaking. And so the Treasurer is seconding that motion. Is there any further discussion?
Mr. Chairman.
Mr. Treasurer.
I think that's a great idea that the superintendent had to look into this, and we maybe a universal license and a percentage of it going back to the school foundation program. That might be the way to implement it. So I know it's not really enforceable on a case-by-case, section-by-section basis, But I think across the state, you could control when the antler season was there, and get rid of some of the conflicts that might exist if you don't have a license at the season period.
Thank you, Mr. Treasurer. Further discussion?
Mr. Chairman,
Madam Director.
just for purposes of clarity, I believe the auditor may have provided the director's recommendation for H2, which was the Duncan Ranch Resource Coordinated Management Plan. Whereas
Sorry.
I just wanted to make sure we had the right recommendation before the board. Thank you.
Thank you. Madam Auditor, do you want to restate that?
Yes, if I can find the right page, perhaps, because I was on the wrong one.
It's to approve the amended restriction to the collection of shed antlers and horns.
I would make that motion, Mr. Chairman. I apologize.
Thank you, and I assume the treasurer has seconded it. We are on the right motion. All in favor of the motion with a thumbs up. I see the superintendent, the treasurer, the secretary, and the auditor. That motion carries. Thank you.
Thank you, Mr. Chairman. The final item that we have on the Board of Land Commissioners agenda today is the forestry and fire report from State Forester Bill Crapser.
Mr. Crapser.
Thank you, Mr. Chairman, members of the board. Got a couple of forestry and fire things to bring you up to speed on. Spruce budworm still continues to be our expanding pest across the state, hitting Douglas fir pretty hard, particularly in the southern bighorns and down in the Medicine Bow area. One thing I would bring to your attention, if you're driving between here and Laramie, down Telephone Canyon to the south of the highway, it is a state section. You'll notice there's been a lot of thinning, a lot of slash piles in there. That area has been hit really hard with spruce budworm. What we're attempting to do is we took the understory out that was impacted really hard, and it's trying to make the overstory more resilient, get a little bit more moisture, and hopefully it will recover. I would love to tell you today that a year from now that hillside will be nice and green and the spruce budworm will be a thing of the past, but it's actually it's kind of a long shot that we're trying to save the overstory in there, but it was the best option we had. Also on forestry matters, Mr. Chairman, we've really expanded our Good Neighbor Authority work with both the BLM and the Forest Service across the state, doing projects on federal land. In fact, the timber sale that you did approve, I-1 today, is a combination sale. Part of it's on school trust land, part of it's on BLM, and we're using the Good Neighbor Authority on that. And then working with the Forest Service on the shared stewardship agreement you signed last summer, Mr. Governor, to expand work on Forest Service land. Switching to fires, we finally are getting some of our final numbers for last year. We had over 1,000 fires in the state last year. Now that a lot of the counties are reporting, the disturbing part of that, Mr. Chairman, is we're well over 70% of our fires are now human caused in the state, which is a major change over the last decade, and it's a concerning change to us. Coupled to that, our discussion earlier about fire restrictions, I think it's going to make fire restrictions even more important going forward. The other real concerning thing right now is our snowpack across the state is average at 78%, and there isn't any place in the state that I believe it's over at 100 or over 100% snowpack. As you all know, in fire briefings I've given you in past years, it's way too early for me to forecast what the fire season's going to look like, but it's a disturbing trend. Last week, we did have our first fire of the year on state trust land, about a 30-acre fire up in the Black Hills, wind driven, and it's pretty early to be having fires on state land at this point in time. With that, Mr. Chairman, I'd be glad to answer any questions about fire or forestry that you'd have.
Thank you, Mr. Crapser. Are there questions? I see the treasurer has a question.
Yeah, thank you, Mr. Chairman. Mr. Crapser, you mentioned the snowpack. Can you offhand recall the website or the address for the our snowpack so we can kind of follow that? I was asked that question the other day, and I don't have the answer, and I see you there with a plethora of knowledge.
Mr. Chairman, Mr. Treasurer, I believe it's NRCS that keeps that. To be honest with you, I just Googled Wyoming snowpack before the meeting and got the numbers. So that's the simple way to get it. But I believe it's NRCS.
Wyoming snowpack. Thank you, Mr. Chairman.
My mouse disappeared. I'm sorry. It took me a while to get it back. Thank you. And also, Mr. Treasurer, I think if you look at Wyoming Snowtel, you'll come up with a listing of various sites around. Mr. Crapser, thank you for that. On the Mullen Creek fire, just curious, you know, as we've gone into the winter, what are, you and I toured that, and I know that we have a lot of burned slopes where some of that soil may have been sterilized. I'm worried about silt loadings and things like that. Has the Forest Service or the state looked at that and kind of worked up a plan on how to deal with spring runoff if there should be some?
Mr. Chairman, the Forest Service, as you know, about 98% of that fire was on Forest Service land. The Forest Service has been hosting several meetings. Our staff in Laramie has been attending those meetings, working with them along with the conservation districts. Through our fire mitigation grant with FEMA for the suppression of the fire, Homeland Security also has a mitigation grant that's part of that, and they've been working really close with our folks in the Forest Service and the conservation districts trying to come up with a plan. The big concern, as you and I discussed when we were over on the fire, the big concern I have for a lot of sedimentation is if we start building up snowpack and then have a major rain over snow event in the spring, we're going to see a lot of sedimentation, a lot of soil movement. This isn't an upside to things, but right now the snowpack is low enough that there's not that much moisture over there at this point, but that's going to impact things too. As far as regeneration and reforestation, the Forest Service is working on some plans. A lot of the land that fire burned is in either the Savage Run or the Platte River Wilderness, which limits some of the things they can do in those areas.
Thank you. Well, and I just want to thank you and your crew, and I know we had fire teams from around the state, from Goshen County, from Johnson County, from other places, and really just remarkable work. Thank you very much.
Thank you, sir.
Further questions? Mr. Secretary.
Yes, thank you, Mr. Chairman. And speaking of that, are we pretty much up to date or on time in recompensing our firefighting partners around the state?
Mr. Chairman, Secretary Buchanan, I think we're doing pretty good. As you guys probably recall, a couple of years ago, the legislature expanded one of our revolving accounts. So for billable fires, even Forest Service fires, we can pay the counties now, and then we bill the Forest Service. With the amount of fire activity across the country last year, we ran a lot of fire bills through that account to the point where we did run out of budget authority, but we worked with the governor's office and B11 more authority in. So there was a slight delay in November, but I think we're caught up. I was talking to a county fire warden yesterday, and He was actually patting us on the back because he was getting payments 3 weeks after he sent us a bill. So part of the problem, and we've had this with a couple counties, including the governor's home county, we've had to remind them that they have to send us a bill before we can pay them. But it has been working pretty good.
Thank you for the update. Appreciate it.
Thanks. Further questions? Further questions? Mr. Crapser, thank you. Anything more you have?
That's it, Governor. Thank you very much.
Thank you, Mr. Crapser. And again, thank your crew. Really extraordinary work this year, and thanks for getting us up to speed on all these things. Madam Director.
Mr. Chairman, that concludes the agenda for the State Board of Land Commissioners today.
Okay, I do see Treasurer Meyer before we are finished.
Yeah, Mr. Chairman, just kind of a housekeeping thing there. When we're going over that land exchange, I saw that we cited a 2005 session budget footnote, which those footnotes are only good for 2 years. So I think when you look at that 10,000 acre buffer zone or baseline, we should either do one or two things for kind of housekeeping, either make it a policy of the board, because that would be our authority, because you necessarily don't have a budget footnote, authorization, or ask the legislature to put that in a regular statute. So I just wanted to bring that up. It's nothing that's earth shaking. We're going about our day now, but we're citing a footnote that necessarily doesn't have any effect anymore. So I wanted to draw your attention to that.
Thank you, Mr. Treasurer. Thank you, Director. I'm sure you took that in mind, and I think you said this is all that we have to do today. And so for the good secretary's benefit, I want to say I'm 10 minutes of 11, which is well before the 11:30 that we did at least one time this year.
That's 12 hours to your credit, Governor.
Thank you very much. I would entertain a motion to adjourn if that was in order.
Move to adjourn, Mr. Chairman.
It's been moved by the treasurer. Is there a second?
Second.
It's been seconded by the superintendent. All in favor of adjourning, please signify with a thumbs up or an aye. I got thumbs up.
Aye.
Thank you, Madam Director. Thank you, Deputy Director, and Ms. Dyer, and Mr. Crapser, members of the board. And thanks to the staff of OSLI. I know it's been a tough year. Thanks.